whatever you need to get this information. If you have access to a second device, grab that second device so you can able to follow along with me as I do these things. So man, I'm super excited. So if you guys have those things ready, let me know with some sevens in the chat. Let me feel that energy, and we gonna jump right into it.
UJ was the first pair.
UJ, man, did y'all take UJ? Did anybody take UJ? I hope somebody took it. Okay, let's see. Can y'all see my screen? You can see my screen. Let me know.
Yes, sir.
Okay, cool. Just want to make sure. Okay, so let me get down. See, we was marking up on this thing, right? Wow. So for your week 30 trade setup, man, as you see, TP definitely smashed. Whether you were the aggressive trader or the conservative trader, you got to the money. If you took this trade and you like how it look in your account, type some dollar signs in the chat. We're talking about 226 pips. Lord, let's go. Sheesh. And we still waiting on this retest right here at our zone, where you got that nice breakout candle. Breakout, retest, trade. That BRT is something serious. What's our next pair?
EU.
Let's see what EU got for us. Okay, EU did a little ping pong action. It played around on you. So where are we at? I basically took it from 8 to 9 was where I considered our starting point for when we were looking at these charts. So put the 2100 hour. This candle right here was also the breakout candle of this zone. Got you a nice little 10 pips. We lock in 10 pips. All right. So we call that a 10 pip win. But also, if you can see in here, let me hide this real quick. Let's get, that's not the right one. No, it is, but it's the wrong button. Okay, boom. All right, so you remember, this called this little buy too as well. So we were just kind of waiting to see what was going to happen, and it just so happens it did both, y'all. It did both. So we'll take the little 10 pips, but if you didn't take those 10 pips and you took this buy instead, congratulations, you walked away with 67 pips. 67 pips. And it came back and gave it to you again because it broke out of our upper zone as well. Beautiful wick entry retest for another 31 pips.
Chef J.
Okay, Chef J. Ooh, sheesh. Chef J. Sheesh. Okay, so we got our top zone here. We have a nice, beautiful breakout candle right here. This is where we were, 2100 hours, trapped nicely in that zone. Clean breakout, wick entry retest. Sheesh. Wick entry. That thing got you in there by 6 pipettes. Sheesh. Beautiful. Anyway, for 57 pips, right? And then it gave it to you on the downside as well. You have a nice breakout candle right here at 9 a.m. Beautiful retest. Got both the aggressive and the conservative for, and it's still dropping. Sheesh. So currently running, move on me. Currently running 53 pips from profit. Sheesh. But when I looked at it, it was 40. So, but sheesh, right in your face. Lord, is anybody in this trade? Is anybody in this trade? That's crazy. What's our next pair?
US oil.
All. That US all.
That oil.
Okay, so US oil. Remember, we had this nice big old gap right here. Eventually, that thing got to do what? Close. It's got to come put some paint where it ain't. It's like they just skipped over the whole section because they did. Right? But those gaps must fill. So we were in this upper quadrant. This is our 2100 candle right here. Consolidated right inside the zone. Nice breakout candle around 3 a.m. Excuse me, we got a nice retest entry. Did not knock you out, right? 50 pip stop loss, did not knock you out. Beautiful, aggressive, and conservative. Got to the bag. You know, call that 80. It's not 81, but I gotta think the right way to say that, but it's like 810 pips. It's like 810 pips. But anyway.
Hey, you.
AU. Let's see. Oh my. AU.
Yeesh.
Oh my. AU. So remember, we had this nice little consolidation zone. And it was like, okay, well, depending on which way it goes, you know, we're going to wait on the market to let us know what it wants to do, right? So have it trapped either way. It's nice consolidation. We happen to get a breakout on the downside. On the same hour we were on the call. So did anybody capitalize on this trade? Because it gave it to you twice. I just want to know. Because they gave it to you the first time last night in class, right? Could have took that for 57 pips. Almost got the conservatives in as well. But this was a trade really for the aggressives, right? 57 pips on the first run. If you so happen to catch the run today or yesterday, let me see what time is this. Yesterday, right? Caught this run down 101 pips. Sheesh. 101 pips. EA. Let's see what we got. Okay, EA. This one, this is where we were, still kind of trapped inside of that. All of this really is just consolidation. We got a nice breakout candle, but we did not get picked back up. So that's still pending. What we got next?
GU.
GU. Okay. Now, GU is another one of those ones that was in this consolidation area, right? But drew up some zones based off of this upper area right here and this lower area. So this is where we were, 2100. Got a nice breakout candle. Came up, gave you a nice little retest. You can take 10 pips on that. It gave you 15, but we'll call that a 10 pip win for locking in those 10, right? And it blew through. It blew through everything. Came back, gave you a retest, and shot up for 102 pips. 102 pips on the buy. Sheesh. GJ. Okay. All right. Bound to lose one of them, right? So this is where we were, trapped inside these two zones. 2100, got a nice breakout candle around 3 a.m. Did not come back to our zone to pick us up until the news this morning, smashing the stop loss. Okay. But it's all good, no worries. We got a nice, beautiful breakout candle right here. Boom, at 8 a.m. Oh, that was 10 p.m. So we got an 8 a.m. Boom. And beautiful retest entry, 80 pips. 80 pips win, so we'll call that a net on GJ of 30 pips.
Go.
My boo. Now, I don't really feel like we can count this one because I don't think that everybody would have knew to go all the way down to the 5 minutes for an entry. So I'm gonna say this is still pending. But if you know what's going on around opening bell, can I just show it to y'all? I'm gonna show it to you. But first off, this is where we were. We were trapped inside this zone or these zones. 2100 is our candle. Got a nice breakout right here with the news, well, right before the news, right? The news is at 10 a.m. this morning. And it was negative. The news was negative. So negative news, right? It's dollar. That should make gold go up. And hold on, it's the 5 minute. I want y'all to see this entry. It gave you your breakout. Hope everybody can see this. It gave you your breakout right at 9:30. Gave you a crazy wick entry, no drawdown for real. It's like 11 pips, something crazy like that. I want to see, hold on. 11. Yep, 11 pips. 11 pips of drawdown for 4,411 pips. But we can't add that one because
That wouldn't be fair.
It wouldn't be fair. So, but just know, sometimes you got to
PTDB.
I'm sorry, what do you say?
PTDB.
PTDB.
Push the dang on button.
Oh, yeah, absolutely. Oh, yeah. Yeah, that was a new one. I was like, what? Okay, what we got next?
EJ.
EJ. Okay. So, excuse me. So EJ was another one of those on this buy. Gave you a 15-minute entry. Gave you a nice 15-minute entry. Excuse me. For 54 pips. Okay. Then we got a nice breakout on the bottom side as well. At 3 a.m. this morning. Came back and wicked in both the aggressive and the conservative. And it's still going as well for 100, well, hold on. 150 pips as of right now. Did anybody take this trade? That's crazy. That's crazy. I wonder if is that man. Okay, never mind.
They're not on the call. That's all it is. They're just not on the call.
It's cool. It's all good. It's all good.
SP 500.
SP 500. Okay, so it's another 15-minute entry. Another 15-minute entry. Sheesh. Nice breakout. Got to be quick though. You see it, just a little breakout, a little bit. 5 a.m. this morning. Wick entry retest, 147 pips. 147 pips. Then on the bottom side, gave you another breakout, beautiful retest entry, gave you a few opportunities to get into that trade. Came close to your stop loss, but it did not hit it. It did not hit it, but you got 154 pips on the sell side as well. Man, this is a beautiful day. It's only Wednesday.
It is.
It's only Wednesday.
It's an awesome day. It's
Man.
an awesome week.
Win week.
Winning US 30.
Yeah, that is. Let's see what we got. What we got. Uh-oh. Looks like another. Okay, so we got US 30. Got US 30. Came close to your stop loss, but it got the aggressives and the conservatives in the trade. Everybody got to eat. This is where we were. Kind of played around the zone, nice little breakout, retest, get you to the bag, 913 pips on Dirty 30.
Man, that's a clean 30. The way them pips slay it in. UK oil.
UK oil. UK oil. Okay. So we were trapped inside the zone, these two zones. This is where we were, 2100. Got a nice breakout candle, retest, put you in a trade, took you up for 114 pips. 114 pips on UK oil. And by the way, it got both the aggressives and the conservatives to the money. Man, sheesh. Sheesh. What's next? I'm so happy to be here.
Kyle said you cannot make this stuff up. You sure can't, because the proof is in the pudding, and this right here.
It's in there. You said EG, Euro GBP?
Yes.
All right, let's see what we spaghettios. Okay, we was trapped nicely in between these little zones right here. 21, excuse me, these allergies are tearing me up, y'all. Excuse me. 2100 is our candlestick. We were on nice little consolidation, and then a massive breakout candle right at 3 a.m. Beautiful wick entry retest. Gave you a couple of opportunities, right? Couple of opportunities to get into this trade. Everybody's at the party in profit. If you are still in this trade, you are currently up presently 21 pips. You've had as much profit as 26 pips. So, you know, you can do what you do. Your trade, you know, once it's in the blue, it's on you. All right. What else we got?
That was the last one. Let me
That was
count.
the last one. Sheesh. Sheesh. Man, if y'all took some of those trades and y'all understand why I have like this, like the big smile ain't even came out yet, but I feel it's coming, because sheesh, man, I feel like when that number pop out, it's gonna be something insane. But it's okay. We're here all month. Stick with us. All right. So while we get a tally on that, let me see. Do we have any questions about anything that we discussed on Monday? Because on Monday, we kind of went over another or a deeper breakdown on Jesus. On the dollar, right? Another top-down analysis on the dollar. Broke that thing all the way down from the tippity top, right? From the top, okay? So, yeah, any questions about that before we jump into today?
Siobhan has one. Go ahead and unmute.
Okay.
Hey, how you doing?
I'm fantastic outside of these allergies, but I cannot complain. How are you?
I'm fine. My surgery went well Monday. I was not on your class for that reason, but not sure everything that happened on Monday. But I was just wondering if you can go over the utilizing the different time intervals to see when to enter a trade.
Okay, that's basically what we talked about on Monday. So that's good. We can do that. We can revisit that a little bit. And I'm so happy and grateful to hear that everything went smooth. You back at the crib and you locked and loaded in class. Speedy recovery to you, ma'am. All right. So we can definitely do that. So let's look at it, right? We'll run it through it real quick. So we're talking about the dollar, right? So with this dollar, we said, okay, what do we really see right here? This is not the monthly all-time high, like this says all-time low. This is over here. However, this is the current high on the monthly time frame because it has failed to break that point, okay? Failed to break that point. So because it failed to break that point, we should be expecting some bearish pressure, which in fact did happen, right? The market came up, failed to break this high. Because it failed to break this high, it's got momentum to break the downside. Broke the downside. And what do we notice about this candle? What is this candle doing to this line? Checking in the chat. Checking in the chat. What is this candle that I'm hovering over doing to this line? It's breaking through. Absolutely. Breaking through. So we call those candles that are breaking through, we call those breakout candles, right? So because we have that breakout candle, now we need what? The other part of our acronym, which is BRT. Break, retest, trade, right? So what we need to see happen is this market has already broken through this level. We need to see the market price action come back to this level, and then we can take our trade down. Okay, so this is what we're looking for. Oh, wait, that happened right here. All right, that happened right here. Hold on. The market came down. All of this is irrelevant as it pertains to this. And the reason why I say it's irrelevant is none of your business down here, because the only thing that you should be focused on this time frame is it coming back to retest this breakout candle. Now, that's not to say that there are not opportunities, but that's not what we're focused on right now. All right. The higher time frame, which is the monthly, clearly says that we are in a downtrend, correct? So if we are in a downtrend, then we should be looking for down moves. Okay. So we have this nice down move set up on this high time frame. Let's look a little lower on the weekly, see what we got. Okay. So what we have here on the weekly is the market made this high when it came up and did this retest on the monthly, right? Gave a couple opportunities. The market broke structure, broke this low right here. This would be a higher low. It broke this higher low. It broke this higher low. Okay. And I'm using these these terms on purpose to kind of segue into what we're going to talk about. Okay. So you got this higher low that's broken, this higher low that's broken. Boom. Guess what it does? It hits this level of support, shows some little indecision, turns around. But in the process of it turning around, it only goes but to the previous high and then falls again. But what did this indecision create? It created a what kind of candle pattern? What do we call those? Miss Denise, when you go on your MT4, don't type in DXY, type in dollar in the search, and that should bring it up for you. Right. It created a bullish engulfing candle. Bullish engulfing candle, or an order block, right? Same terminology, or different terminology, same meaning. Okay. So came down to this order block. It's currently retesting this order block. It pushed down into it. It's kind of retracing some as what we would want to see happen. All right. We would want to see some bullish activity start to respond outside of that touch. And that's what's happening. Dollar is pushing up right in our face. But what happened today? Today we had negative news on the dollar. And it came out at 10 a.m. Watch how I make this make sense to you. But just pay attention. Just remember that 10 a.m. news came out. I'm gonna show you what it looks like when we get down to that time frame. Okay, we're gonna keep it flowing. So we got the 4-hour time frame now. What do we see on the 4-hour time frame? Well, on the 4-hour time frame, we have clear places where the market makers could target. They like to target equal highs and equal lows, right? So we got a nice target here. The market has dipped down into our zone, our higher time frame point of interest. This is a weekly zone right here. It dipped down into this weekly zone. And as it dipped down, what kind of candlesticks is it really kind of forming in here? Well, I definitely see that the market made this bullish engulfing candle right here. Definitely see that. I also see that they came and took liquidity from this low. They cleared out the sellers and they cleared out some of the buyers too, because they were buying too early. But those sell stop people, oh yeah, they got those real good. It's like, oh, it's gonna sell. They gave them a retest and everything. But if they didn't take profit, out of there. Look, they can all draw down. This is why we don't trade the dollar, by the way. First of all, spreads is outrageous. Okay. So where we at? So the market, as you see, once it took that money and it's starting to work its way back up. So we're gonna see what kind of reaction we get once we get back to the top of this zone. Is it gonna break out or is it gonna respect this previous engulfing candle? Let's see. But we know that the market has to go up somewhat, right? Because all of this is a retest of this daily time frame bearish engulfing candle. Okay, so we have reasons for this market to go up, and that's what we're doing each step of the way. Every time we step down is to build further evidence for what we see on those higher time frames. Okay, so let's go down to the 1 hour. Okay, so down here on the 1 hour, we got some more areas where we can target, more areas where we can get into this market, right? Why do I say that? This news came out at 10 a.m., right? This is 10 a.m. This candlestick right here, that big monster candlestick. So when that news was negative, right? When that news was negative, this is the reaction that it did to the market. So what if you're the trader who doesn't know anything about the news, isn't paying attention to it, and you said, oh, well, it came down and it hit this 4-hour bullish engulfing, and it gave me this reaction, right? But some people still have the conception that the market's gonna just go up and up and up forever and ever and ever. And it just doesn't work that way. You have 5 pips of drawdown right here and a quick, I don't even know how to read that on this thing, but I want to say 334 pips. This is what we're gonna call it, right? So that's an amazing move, but remember, you're not trading the dollar, you're trading what's against the dollar. So if you're trading what's against the dollar, if you didn't recognize that when this dollar gained this strength temporarily, just to hit this point right here, if you were saying, okay, it's going to keep selling, it's going to keep selling, and then all of a sudden the dollar sold aggressively and it shot up things like gold and, you know, some of those other pairs, right? It caused that same reaction around the same time, right? So if you don't know that there is news, please, let's get aware of the news. Forexfactory.com is an absolutely free website. I don't get paid or anything, but this is just a place where you can come and get some education, some news about what's going on in these financial markets. Because in order to really be a successful trader, you need to think about all aspects of it. Don't just think about pushing a button and making some money. It might behoove you to know what's going on in the world so that when you do push that button, you know that you are flowing with what's happening globally, but also what's happening in those charts, right? So if you got to pay attention to it all, right? So now market reached this low, consolidated, gave us a breakout candle to the upside. All right, hold on. I see a question. So if the DXY goes down, does that also mean that indices could go the same way? The indices are a little tricky. I'm not gonna hold you, but because I can't tell necessarily, and I'm still back testing through these indices because they move a little bit more aggressively. So I've noticed that certain times news gives certain reactions that may be adverse to what the news is saying according to other pairs. And then I've seen it be in favor. So I'm still trying to gauge that. But we can work through it together, I tell you that. Okay, and I saw we had another question. What does DXY mean? DXY is the dollar index. It's the dollar index.
Hello.
Hello, what's going on?
Hey, what's going on, brother?
Hi, and Colin, how you feeling?
I can't complain. Another day in paradise.
Yes, sir.
Quick question. After you do your top-down analysis,
Mhm.
can we do like a crash course into Forex Factory? That's something that I'm interested in learning. I never really used it before. And I don't really know like how to maneuver it. Like red boxes are bad, green is good. Do I have to dive deeper into that, or open some more folders to find what I'm looking for?
Not really. So quick crash course, right? So clearly we see the date, the time, the different currencies, right, that we have this news. Okay. Now, the folders right here, the color of the folders, all of it represents the impact that it has in the market. Okay. So red folders are high impact news, right? High impact expected. But let's take these filters off real quick so you can see the rest. Okay, so we got some yellow folders, low impact, gray, non-economic, okay? And the orange ones are medium impact news, okay? So I tend to focus mainly on the medium and the high impact news, because those are really the heavy hitting reports. Now, I'm not gonna go into reports and all that stuff right now because there's so many different ones, and that'll be a whole other course. But we can definitely do that in the future. Might have to tap all the way in on the Hidden Wealth Society. You know what I mean? Get some extra knowledge. You know what I mean? So no, but we'll definitely dive deeper into that because this is something that I pay attention to, and I think it's very important that you all pay attention to it as well. So I hope that gave you a quick understanding, but this filter button right here, this little upside down funnel is how you can go and change all of that. And it tells you the different types of things that it focuses on right here.
Gotcha.
And say you want to understand what it is, simply, there you go. It's supposed to be popping up a folder. Fresh. Okay, boom. So here we are right here. This is the RBA rate statement. It tells you what it is, the source. This is the acronym, what the acronyms mean. This is what it's for. This is why it's important to you, why traders care, and the usual effects. You need to definitely pay attention to the usual effects because that's going to tell you what you should be expecting, okay? Okay. That's how you do that.
Got you.
Cool.
Thank you.
Cool. No problem. Okay, Miss Denise.
Okay. Hello, how's everybody? And thank you, Miss Queen Bowens and Mr. Goldfinger. My question is, I was studying, like I do study the just Forex Academy, not study it, like I just look at it every morning. I try to just about, but I think it was last month. It was a 2:00 meeting, could have been 2 months ago. It was the FOMC meeting.
FOMC.
Can you hear me?
Yep. FOMC.
Okay. And it was regarding inflation. So it had to have been the US 30 because I only really like to trade those anyway. But nonetheless, or it could have been the S&P 500. But nonetheless, I followed it. I was watching the news, marked up did the 7 steps, the whole 9 yard, and it was 2:00. And when I tell you at 2:01, it shot up. So is it so? And I jumped right in. I like to scout. So is it so that because it was over 4%, the interest rate, that it would be a bullish market? Is that so?
Well, it depends on, so you see how we got these 3 different categories right here. We got actual, forecast, and previous. It depends on what these numbers are calling for. All right. So they're always going to look at what happened the last month or the last quarter. Right. So we take that, they forecast based on current projections, things that are coming in, the different data that they are receiving, they're analyzing. So you say, okay, boom, we should be expecting this much. Then on Newsday, the actual report comes out, the actual solid, actual factual figures come out. And depending on what those are going to determine whether or not that market is going to be bullish or it's going to be bearish, right? So when you look at this, I don't want you to get caught up on the color. Please don't get caught up on the color. Pay attention to the numbers and then look for that effect, because this color I've seen this color be green and the market go the opposite way, even though it was calling, calling for it to be bullish. So please don't pay attention to the color. But it just really depends on what these numbers are doing and what they're doing to manipulate the market.
So is it so that if the interest rate goes up, then it would be a bullish market? Because I never even thought about the color. I didn't look at the color for the number.
Okay, perfect. Good. Don't do that.
Okay.
I'll say this: when rates go up, the value goes up.
Amen. Okay.
I don't care whatever market it is. When the rates go up, the value goes up.
Got it.
Period. Okay.
Yes. Thank you so much.
No problem. Great question. Do you have any other questions? Look at it. It's so nice. What does this pattern look like to y'all? What does that pattern look like? Yeah. I kind of see the whole inverted. I'm with Uncle Ken. What if this is the shoulder? This is the head. And it's cop ace deuce. Could it be cop ace deuce? Could the market do something like give us a breakout, retest, and something like that? I don't know. Could it happen? We'll see. We'll see. Because nobody knows what the market's going to do. I don't know what the market's going to do. I know what the market's supposed to do. Right? I know what the market's supposed to do. So if you know what the market's supposed to do, when it doesn't do what it's supposed to do, you know how to capitalize. My whole goal is to take us from being the traders who are impatient, who just jump in the market just because they say, oh man, the trade signal came out. No, we're not doing that no more. We're going to take our time. We're going to analyze. You should never feel like you have to rush into something that moves or is open 24 hours a day, 7 days a week. Or if you're not trading crypto, 5 days a week. You should never feel like you should have to rush. Man. He said it must be a woman. Should never, everybody rushes. Everybody rushes. Man, woman, whatever you consider yourself to be. Everybody rushes. But the objective is to shift that paradigm of impatience, of feeling the need to rush, and just settle down, take your time. Because when you take your time and you settle down, I promise you, you'll be able to see these markets so much more clearly. And if you can see something clearly, you should definitely be able to execute. And you can do that better when your mind is clear, right? So everybody, let's take our time. Let's take our time with it. Okay, we here online, right? And for those of you who are locked in, man, I hope y'all ready. Jeez. Oh man, I hope y'all are ready. So what I wanted to talk to y'all about today is market structure.
You want those results first?
Oh,
bro?
yes. If you are ready, Queen, yeah, let's go. Let's see what the damage is.
Alrighty then. Y'all might want to bring out your phones for this. Put it on your social medias. On your medias. So 14 trades, 11 wins.
I'm moving slow. No, but go ahead. I'm with it.
I'll start over. 14 trades, 11 wins, 2 pending, 1 lesson, 3,052 pips.
Ooh.
Y'all drop some fires in the chat for that.
Ooh. 3,000.
Drop some 7s and some hearts for Hidden Wealth Society.
Sheesh. And
Starting back off with a bang. And that's week 30.
Let's go. Week 30 in the bag. Oh, look at that chat. Look at that chat. Oh, yeah. Let's go. If you're not in the Hidden Wealth Society, get here, baby. Oh, yeah. Okay. I'm excited. Anybody else excited about that? Sheesh. Can you say that number one more time? I was so excited and recording things I ain't even hear. You said 3,000. What? If you're talking, you muted. 3,052. Oh man. Sheesh. 3,052 pips.
Just say it one more. Say it one more good time. Say the whole thing one more good time.
3,052 pips.
No, I need to hear the whole thing. Let's go over the whole.
Oh, the whole thing. The numbers. Yeah. That's. Woo.
All right. So 14 trades, 11 wins, 2 pending, 1 lesson, 3,052 pips.
Jeez. I'm great with those numbers.
Man, I'm great with those numbers too.
And it's just day one.
And it's just
day one. Man. God is good. Man. Sheesh.
all the time.
I am so happy to be here. Hey, let's get right. Don't be weird on me. Don't be weird on me, man. See, like I was prepared for y'all. And it's trying to not let me be great, but we're gonna figure it out. Oh, I know what it is. Boom. There it is. Okay, there it is. Let's talk about some market structure while we got some time. Y'all down to spend some time with me? A little bit of time. Y'all ready to do some good old note taking? Y'all down for that?
You did give us all those pips. I guess we could stay for a little while.
I mean, we ain't even hit an hour yet. Jeez.
Barely.
Hit the hour yet. Oh, I love it. I love it. Oh man, I'm excited. Sheesh. So market structure, and market structure is very, very important. If you don't understand market structure, how can you understand what types of trades you should be taking? What type of market you're even in, right? Everybody has heard the term or the phrase, the trend is your friend. But do you actually know how to identify it when you're in it, right? So what I would suggest is going to kind of tie into what we talked about with the top-down analysis, excuse me. But when it comes to identifying the market structure, I want you to focus on two time frames, the daily and the 4 hour. I want you to focus on those two time frames to look for what's going on in the day-to-day, okay? Because those are very, very important. We have the parent trend on the high time frame, which is going to be the monthly and the weekly, but we need to know what's going on every day, right? So let's look at it on those two time frames, okay? So once you have established the type of trend that you are in, right, you're going to notice certain things, right? We're going to notice a high. The market moves upward. I wish I had one. Which one can I draw with? They don't do nothing. Oh no, that's not what I want you to do. Okay, hold on, y'all. Okay. Okay, so we got the market, it created this high, right? Failed to move higher, creating a low in the market, right? Everybody following. Now, in order for this market to let us know that it's in a uptrend, right, we should be seeing some upward movement, right? And how do we know that that upward movement is going to hold? Well, we'll know when we get breaks of structure, right? So the market created this high. It finally broke above this high. As it broke above this high, what did it do? It created a new high or a higher high. So my bad, all these H's, hold on. We're gonna correct it right now. Correct it right now. Those are supposed to be higher highs. Let's get that out of there. Put that right there. Okay, easy fix. So the market created a higher high now. Okay. And as the market created this higher high, what did it do? It also created a higher low because it respected this one. And it also came and still broke their structure. That might have been a retest with a wick, might not be. Might be some fresh money sitting right here. You don't know. Can't wait till we get to the live market so we can see what's popping, right? But let's get these concepts. So the market comes back down, respects this high, respects that structure, does what? Breaks structure again, breaks that high point, creating a higher high yet again, okay? And so forth and so on. And once you've established this higher high, higher low pattern, you know that the market is now in an uptrend, okay? Ultimately, those movements create this swing high. And how do we know it's a swing high? Because the swing high causes a break of structure to the downside, okay? So let's go ahead and put a line right there. Let's make it red. Break of structure. Okay. Got that break of structure to the downside. So now that's a potential that this market is shifting. But before it does this break of structure, it's more than likely going to come down a little bit and create some form of a reversal, a lower high, lower low, right? It's going to put us into this structure here, okay? Which leads me to the next thing, which is the opposite side, the downtrend, okay? So this market is in this downtrend, right? Because we have established, okay, we've established our high point, and we've also established that the market has broken structure to the downside. It broke that higher low, creating a lower low. And it failed to break this high, creating a lower high. Okay. So as the market continues, what does it do? The same thing it did on this side. Break structure, moving to the downside. Okay. Creating what? A lower low. Lower low, lower high. Now, what does this look like, right? What if I extended this line? What does this look like that we've been talking about? Doesn't that look like our 3 letters? Doesn't that look like our 3 letters? BRT, break, retest, trade. So what if I told you, oh man, okay. Wait, let's finish this because I'm feeling it, right? So hold that thought. But the market continues to this lower low, lower high pattern, right? Until what? It reaches a low. This is the swing low. Once we get that swing low, we want to see a change of character. So instead of it looking like that, we want to see it look something like this. You see the change of character. Market broke that structure, came back, gave us a retest, continue moving up. That's what we want to see. Okay. Oh man, I love it here. Love it here. I hope y'all are receiving this value right now. It's just about something that's so important, right? This market structure. Okay. So, do we have any questions about what I've gone over thus far before we actually go to the charts and look for some of these things in the market? See, yes. Okay. Go ahead. You can raise your hand. We get you unmuted. Lita. Let's get Lita unmuted so we can get her question answered. Or does she have a question? You're just saying yes. Okay, maybe not. Okay. So with that being said, we're gonna go ahead and we're gonna move forward into charts. Now this is the daily time frame. Same thing that we just looked at on that diagram. Same thing that we looked at, right? This market was going up. So as this market was going up, what was it doing? It was creating lows, created high, created a higher low, create a higher high, higher low, higher high, higher low. This one was a tricky one. Why was that a tricky one? Because this one failed to break the structure. It failed to break this high. So this was quite possibly your first indication that the market wanted to turn around because it failed to break this structure, creating another higher low scenario. And what did it do? Boom. Gave you that last ditch effort push up, and that's your swing high. Right? That's your swing high. Notice our swing high because we got 5 candles. Okay. So your longest finger, your middle finger, right? Notice how it sticks out by itself. What I want you to do is, in order to identify your swing high, is look for that highest point and count 2 candlesticks to the left and find those 2 candlesticks to the right. And that's going to be your swing high, whichever one sticks out the tallest. And the same thing for your swing low. Your middle finger is your longest point, that longest candlestick. 2 candlesticks to the left that are higher. 2 candlesticks to the right that are higher. Your middle finger is your swing low. Okay. So with that being said, did not close above, just wait. Exactly. Just wait. But even with that, it still got back in our zone. Still creating this swing high, because this is the highest bodies. Okay. This is where the market actually closed and opened at. Creating that swing high. The market started to work its way down. Oh, did it create some type of reversal pattern? I see a head and shoulders. Am I the only one that sees that? It's a nice little sideways heads and shoulders. Boom. Cut the head off. And the market dropped down. Okay. So as the market did that, we already know that according to the higher time frame, we are in a downtrend. So what kind of candlesticks should we be paying attention to for our entry? We should be looking for selling candles, right? What's a good kind of selling candle to get into? I don't know, maybe candles that look like this, like a bearish engulfing candle, where smart money got into the market. They introduced their orders into the market, which causes speed to happen, right? So we can enter with them, we can enter with speed. So we can be in and out of the market. We don't have to be there all day. We can get our 30 pips and dip. And when we get those 30 pips and dip, go and explore those other ambitions and aspirations that you have in life. Because your objective is to learn the skill set to replace and enhance your current income, not be a slave to your desk, to your computer, to your phone, like it's a job. But put in the required time so that you get these skills. Because man, when they start paying your bills, it's a game changer. It's a game changer. Okay. Now, notice we have some lows in the market. You need to know these lows because we got into the market. So we're in the trade now. Okay. And the best way is to trade from structure to structure. Okay. Structure to structure. What do I mean by that? I'm glad you asked. I'll tell you. So let's say, because we have this area right here, all of this, I'm going to call a demand zone. Okay. Why am I going to call it a demand zone? Because the market hit this high, came, created some support, created bullish momentum out of that zone. Therefore, it's a demand zone. Gave you a slight reaction to that demand zone. But the bears, they were too strong. They came, blew right through that demand zone, turning this demand zone into a what kind of zone? What kind of zone did it turn us into if it's no longer demand? Supply. Turn it into a supply zone. And what happens during supplies, or when you have an extended supply? You got to do what? You got to do something. You got to get off your inventory. You got to put it in the streets. You got to sell something, right? Look, it's sold. Okay. The market came down where? To this next structure point. But it was a beautiful buy opportunity. But notice the size of this buy, which is great, 176 pips. But I'm going to put one up for the sell. And you tell me which one makes more sense. If this doesn't illustrate the difference between trading with the trend and counter trend trading, I don't know what will, but I hope this does. Okay. I hope this does. That was your one buy opportunity. And we'll just take it to that structure point. Okay. That was your one buy opportunity for 176 pips. But the selling trend is the parent trend, and it got you 446 pips. So let's check the actual risk to reward. So for that buy, you had about 30 pip stop loss on the daily. That's an amazing amount to risk on such a high time frame, for the record. But 30 pip stop loss for 176 pips. That's great risk reward. That's a 1 in 6 on your money. And you're gonna be like, oh, I'm killing the game. But what if you're the trader who's greedy? What if you're the trader who says, man, it's gonna keep on going up forever, Mark? And then the market says, no, I'm not. Look, everything that you just gained, if your greed kicked in, you gave it all back. Is this how it played you? It came right around your entry and started going in profit again. So you're still in profit. You haven't even lost this trade yet. But everything that you gained, you gave back because of your greed. Thinking that it's going to do one thing, and it doesn't. But if you would have just stayed in the parent trend, you could have been easy selling, and you could have realized that only thing that this market did was come back and retest your zone when it broke out. And you could have took another sell entry somewhere potentially in that zone, because you already knew that it had to come back and retest one more good time. And you could have possibly entered again, caught you another 288 pips. I don't know. I don't know what makes more sense to you as it pertains to market structure and the types of trades that you take. But I hope that I am showing you that if you get that higher time frame trend going on and you take trades according to that higher time frame trend, I promise you, you are going to eat. Oh yeah, we're going to talk about taking partials, but that's proper risk management. That's how you maintain that trade. But sheesh.
We have some
This is
questions.
daily time frame. Okay, absolutely. Let's go.
Go ahead, Jason.
Good thing. I'm gonna talk really quickly because I'm out in the sticks and I don't want to get kicked off. However, I want to talk institutional candles, and I do want to give honor to your tutelage. Give thanks that you broadening this out if we go to right after you spoke about that, that second higher high that did not break the previous high, and then the next one,
Talking about this
the
one.
right after that, would you consider that but no, to the right, the that blue bullish candle
This
that
one?
went up, and then right there, would you consider that the institutional candle, and therefore what it actually did is retested the bottom of that institutional candle to drop down?
Yes, that is an institutional candle, but that's not necessarily the one that I would want to enter off of. But it's a couple good things that I do like about that particular candle. Let me hide that for a second. And one of them is the fact that this particular candle that you mentioned did a liquidity grab.
And right after that liquidity grab,
It showed, the market showed what it wanted to do. So because it now showed me what it wanted to do, it still had this little roadblock right here, which is this is the last buying candle before the up move, right? This up move, this would have been the impulsive up move, because remember, at one point where this wick is, that was a whole big blue candle, right? But they couldn't hold that. So they end up being a liquidity grab and the market going the other way. But first it had to clear through this bullish order block. And how did it do that? It created a bearish engulfing right around it, came back, retested, boom. But look at your risk reward here. You already know according to the higher time frame what you should be doing, what you should be looking for. And when you see those power candles happening in congruence with those other things that you're looking for, those other confluences, that's the word I'm looking for. And you see all of those things lining up, pull the trigger. You gotta pull the trigger. And
so
go ahead.
So if I'm understanding correctly, right there, it would be more of a conservative move, making sure it, actually showed you where it was going to go, as opposed to setting up your entry at the bottom of that institutional candle where it did, retest and then drop down, instead of, waiting. I mean, instead of setting it up early, should you just wait conservatively? In my mind, that would be for that second portion that you talked about with that pothole to the left. Did that make sense?
It does. It does make sense. And you want to know my reasoning for saying that? Let me tell you.
Yes.
Okay. So what did the market end up doing? It came from this high point, bounced off of here. But how would you feel? I don't know. I don't necessarily feel comfortable just taking it off of this alone, because this market could have respected this bullish engulfing, and being that this didn't really make an engulfing candle, it just did a liquidity grab, this market still could have pushed up past there. It wasn't until the market created this that I now feel comfortable getting into the market, because I see the type of candle, as opposed to like, well, is it not? I know I got the liquidity grab, that's good, but the market also, I got this bullish engulfing right here, like, that's something to consider. Because think about it like this. You got this bullish engulfing candle here, which did what it's supposed to do. It pushed this market up. But look at the size of this, right? Where the buyers showed their last strength versus the sellers, and how they showed how they feel about their position. You know what I'm saying? This one's bigger.
Could you do this for me? Could you do this for me, just for kicks and giggles? Because if I was looking at it in regards to institutional candle, then in my mind, that's what I would look forward to do. And within that, since that will be my thought process initially, I will go to the left. I will create a line at the bottom of that, what I call that institutional candle. Actually, from the bottom of the wick to the top of the wick, where where it did that liquidity grab.
You talking
in the
about this whole candle?
institutional candle, right? From there to the top of it, and then go. Oh, well, I would put it to the left, extend to the left, and then go to the left to see if in the past it respected that for a stronger confluence for me. You know what I'm saying?
I mean, I got you, but I mean, if anything, why not just look at the head and shoulders?
Well, that's respect.
You know what I'm saying? That's essentially the same thing. So we still see the head and shoulders, but I think that it would be more advantageous. Yes, that's a move that it is catchable, but I got to remember that everybody on the call isn't an experienced trader. So I would rather teach them a more conservative manner while we're on this free training for this month, and while still giving the sauce, but teach them in a more conservative manner. And as you know, we attract more and more people hop on these calls. And I hope y'all are sharing this out with your friends. I hope this is valuable information for you all. I hope you all are gaining some gems, some things that you can take and apply to your own charts, right? And let everybody know what's going on. So
respect. You answer my question. Respect. Give thanks.
Okay. Yes, sir. Yes, sir. What we got?
Another question.
Okay.
Well, thank you. I have to thank you for this level of education. I'm like blown away.
It was hiding, man.
It's a shame to say that I was even going to school for almost 2 years.
Really?
Yeah, my God, my God. Anyway, this institutional candle thing, I'm going to have to do some offline studying because I love to study, teach myself some things. But my question is with these zones, I don't think I could have missed anything because I go to class, I'm tentative. But you said a demand zone and a supply zone, right? So I got that. So which one would actually be considered? Well, this would actually be considered the golden zone, right?
Well, I haven't pulled out a field, but probably the one in the middle is going to be the closest.
Yes, the golden zone. So you call that the
Let's put a field on it. Let's see.
okay, let's where's she at?
Yeah, it's right in there.
That's
Well,
oh,
no,
there it is. I see it.
This is the golden zone. This level right here. So I guess in order for that particular move, we would have to draw our field.
Okay, it's just the terminology that you're using.
Gotcha.
Okay.
Gotcha.
This is new stuff for me, and I've been learning since April 30th of 2021.
Okay, I love that then. I love that.
And I just want to thank you.
Together. Oh, no problem.
Hidden Wealth Society. Okay.
Oh yeah, you gotta know it. You gotta know it. So let's see. If we was to put a fib on that move right there to get us here, it missed the golden zone, but that hit the 38.2. But for this reason, anybody who's known me for a long time know that, you know, fibs is the bee's knees. But I'm telling you, I feel different about them. After all these years, I feel different about them. But they still lit though. But I just feel different. And as we dive deeper, y'all gonna understand. Y'all gonna understand. It's okay. Just roll with me. I got you. God got us. This is a ship that's in great hands because he's steering the whole thing. So I love it. I love it. I love it. So this, for instance, right? This is a demand zone. The market came down, and what did it do? It created this massive impulsive move to the upside, right? So when you got to look at the origin of where those moves take place, even on the sell side. So if you look at the origin of where these moves take place, look, it's most likely going to be some type of engulfing candle, right? Because the only people who can shift the market are the market makers. Those are the only people that got enough money that can shift the market. Okay, so we need to look for those type of candles. You find those type of candles at the tops and bottoms or inside those higher time frame points of interest. Oh, you in there, you early to the party for real. You know, it's crazy. Look, this thing created that bullish engulfing candle. Next day, 3 days it took to do that, to create that reversal, and shot all the way up. No drawdown for real. 13 pips of drawdown on the daily. You could have went all the way to the wick conservatively with your stop loss at, at 50 pips, or you could have took it at the body for 36 pips, right? But check it like this. Would you be okay risking 36 pips or 50 pips to make 557 pips? Come on now. We're talking about a 1 to, what did that say? Oh, that's the wrong one. That's why. What that thing say for that risk to reward? That's a 1 to 3.5 on your money. Oh, wait, no, it's not. Hold on. A 1 to 15, my bad. So for every pip you made $15, stop playing. Times whatever your lot size is, stop playing. This stuff is important. This stuff is important. Okay. And I think, oh, wait, hold on. Let me take it all the way down, right? So we got these areas of demand. Notice how same zone right here, right? Same zone. Market came back again to it. Boom, gave you that reaction you're looking for one more good time. Then what did it do? It came back all the way again. This time it took liquidity. Okay, took liquidity, shot up right back to your zone, previous zone. This is establishing resistance. Support on the bottom, resistance on the top. It's establishing resistance. What does it do? Shift down again, breaking structure again. Uh-oh, break, retest, trade, take it down real quick. Why? Because it's in agreement with your higher time frame trade, your higher time frame trend. It broke that structure, gave you a retest, 23 pips on the daily. Boom, dropped down 147 pips. Then it said, I like you so much, I'm gonna give it to you again, this time with less drawdown, because y'all so sweet, nice people, and y'all learning from the Hidden Wealth Society. And it said, I'm gonna give you 162 pips this time. I'm gonna give you a little bit more because you've been good. You've been showing up day after day. I love it here, right? And then what happens? The market creates this last low. Boom. What does it do? Takes liquidity, creates a bullish engulfing, shift this market right back. Uh-oh, ran into that resistance again. That must be a strong resistance because it can't break it. It's then popped up there 3 times now. What'd it do? Break again. This time it broke that last new low that it made. Create another lower low. Another lower high or higher low. Excuse me, lower high, excuse me. Yeah, I said it right the first time. Lower low, lower high. Breaking structure. Uh-oh, breakout candle. Breakout candle. Retest. Uh-oh. What we get? Some consolidation at the bottom. Then the market shifts back up. It breaks above this zone. Comes back down. Uh-oh. Do we have a new demand zone again? Is the downtrend over with? Oh, well, look. Do we have an entry? Why, yes, Mark, we do. It's right in my face. Do you see it? I hope you do. Oh, right off the bullish engulfing, because we know that the banks are now in the market. Stop loss below the low. Oh, came back, beautiful retest. And let's just keep going and going and going and going and going and going and going. Because what happened? the market gave us a change of character. That change of character is how we knew that the downtrend was now over, and now we can run this market long, right, with the bulls. Sheesh, how many pips would that have been? 844 pips, risking 72 pips. Ouch. I hope y'all learned something. So on that note, we got any more questions, comments, or concerns? I don't want to hold y'all all the way till 10 o'clock like I did on Monday, but I'm down for some questions, and then we're gonna get up out of here. See, we got a hand raised, Charles. What's going on?
What's going on, King? Just want to say gratitude to you. Definitely value in that. But as far as when you were talking confluences for that, I see a W in there. So that would
Right in here.
I see you go over here, you get your W.
Oh yeah, I see the whole thing.
Yeah, you see a W. So to me, that was a confluence there. So, and then I would have gotten into that right there at there and just took that market up. So,
and that's good. That's good. But where did your entry occur? Right off the second. This is the formation. This order block right here, that bullish muffin, that's the formation of the second leg of the W. But you catching this W right here? Did you catch that W too?
yep.
So you got W's within the W.
Yes, I do. 2 W's. Yeah. So that was it. That was the confluence for me. So
either way, sniper gang. But that's good. That's good. I love it. I love it. I love it. Great question. Yeah. We got any other questions? Any other questions? Okay. Well, on that note, man, it has been an absolute pleasure to serve you all, the Hidden Wealth Society and friends and family members of Trade Nation Sparta. Man, y'all keep coming, tapping in with us every Monday, Wednesday, and Friday at 8 p.m. on this very same link, same information. We here all month, and we are launching May 1st. I can't wait. So excited. Man, I'm going to see y'all on the inside, baby. Let's go. King Bay, you got it, brother.
Well, while we wait on him, be sure to check out the link that I dropped in the chat. You can catch Mark and Akil both live April 15th in Atlanta, Georgia. Tickets are only $50, not 15. You can pay by either Cash App or the link that has been dropped in the chat several times. I'll drop it again. But definitely come out, get some sauce for the pre-pro trader event. This will be way more intimate than the big one in July, so you definitely don't want to miss it.
And let me say, shout out to you. Thank you for all your assistance, Queen Bowens, keeping us on deck, making sure that we can just flow freely on the call. You got the stats and the numbers and all the information and posting. So shout out to you. Say, oh, what's happening in July? Oh, we got Pro Trader happening in July. Pro Trader.
I'll drop that link also.
Oh yeah. Oh yeah. We all the way. Man, this is about to be so amazing, y'all. We are in 7 years of outpour. I don't know if y'all know that, but it's so many blessings upon blessings upon blessings that are just literally right there in your path. You just got to go and pick them up because they right there. They right there. I promise. They're right there. Just pick them up. Jeez, pick them up. So, man, King Bay, you there, brother?
Yes, sir. I'm here.
Okay.
I'm here.
Oh, okay. Well, I had passed it to you, brother. I didn't know if you was had anything that you wanted to say. Do you have anything that you like to add, sir?
Hold on. Did y'all see my screen? I'm just making sure they can see my screen.
Oh,
We
no.
saw
Go
it.
ahead. I saw it come through. Yeah. Go ahead. Do it again.
Okay, okay. I'm just making sure. You can see my screen. This is the first pro trader.